rejections in the futures market. Here is S&P futures with a big old fake out candle on the 15-minute time frame. I'm looking to see if we actually have a 15-minute breakout above or below that 930 candle. And so far, neither one have really given us any actionable trades. I just grabbed a quick profit on SPX this morning. Price is pretty cooperative with a nice little chop. That's good. BAC looking up. We had some earnings today. I've got a trade. The trade on Dollar General's at 76.23. This trades out to next Friday for a 79 by 78. This is a stock that I'm willing to own. Meaning if my 79 by 78, either I can take the loss for 48 cents or I could consider owning the shares and doing a quick repair. Now to do that,
hey Chris, I don't want to
I should show my screen, huh?
Yes, I wanted to make sure before you get too far.
No, man, we just got to use our imaginations this morning.
Yeah. All right.
All right, we're good. Thanks, Chandler. All right. Here was I was showing this. SPX is pretty cooperative this morning, which is fine. I'm looking at a SPY trade. If I've got a chart alarm at 6:05, I'm looking to see if my SPY gets to 6:05. I've actually got a butterfly spread that could be pretty profitable by tomorrow. Also on the Qs, if we get down to 5:20, I know we have non-farm payroll tomorrow morning with CAD employment. We didn't have a lot going on today with the calendars. Unemployment claims were a little bit higher. Powell's comments yesterday said something to the fact that the U.S. economy was pretty strong, and the Fed rate decision stuff didn't really change much. The CME watch tool was pretty much the same as we saw the last couple of weeks, which is about a 70+% probability. I mean, I guess it's going down. This was 79% earlier in the week. Now it's 69%. Well, we're 2 weeks out from the Fed. And, obviously I'm curious, like everyone else, like, is this going to be drifting down into the maybe high 50s, mid 50s? Is this going to be like a toss-up trade? Will they cut? Probably. They probably will. But then that begs a question, if they cut in December, what does 2025 look like? There are only anticipated to be about 2 more cuts coming through 2025. So we'd have one in December, possibly one in March, and then maybe one towards the end of the year, maybe one in March, one in May, and then a pause the rest of the year. But it's the Fed, so they can do whatever they want, plus this new administration coming in January, plus the debt ceiling is going to get revisited for the first time. I want to see if I took a screenshot of this yesterday. There's some crazy stat stuff. So we're at the 56th all-time high this morning on the SPY. S&P is currently on pace for a back-to-back year with a return above 25% if it holds, of course. 25% back-to-back years has only happened 3 other times in history in 90 years. 1935 to 1936, 1954 to 1955, 1997 to 1998. And let me see, what was the other thing I was talking about? Fudge. Hang on a second. I'm going to go to X. Also, we hit 100,000 plus on Bitcoin today. So that's cool. I don't think anyone's complaining there, right? So yeah, Bitcoin's doing fine. So we are sitting, I'll talk about Dollar General here in just a moment. Like I said, I issued this trade alert, Pulver alert 79 by 78 credit spread, collected 52 cents on the dollar. So scenario would be this. Okay. One is, if price is less than, this is out to next Friday, so we still have a little bit of time in this trade. If price is less than 78 by expiration, we can lose 48 cents and move on. Or 2, this is what I'm considering. I'm considering keeping shares, which looks like this. Broker would assign me at 79. Okay. I would have to close my 78 long put for profit to lower the cost. So let's talk hypothetically here. Let's say that price drops to $70. So example would be if DG drops to $70, then I can have the assignment at 79. I can have my 52 cents credit on the original trade. And I could also have, let's say, an $8 credit on my long put. Okay. So that goes 79 minus 52 minus $8 is going to give me a break even of what? Should be $70.48. So 79 minus 52 minus 8. So I could see the stock price drop all the way down to $70 and I could own the stock at 70.48. Okay? So I'm able to kind of ride the stock price lower. So that'd be equal to 70.48 would be my break even. So what would I do? Well, I would add a, let's say, 14 to 30 day covered call for a break even or better. So rather than taking a loss on the trade, I would try to repair this stock and lower my cost basis. Now, if I went out 14 days or 30 days, let's see what that looks like on DG for an at the money covered call. Okay, so let's go to the trade on DG. If I went out, let's say 15 days, that would be December 20th expiration, give or take. If we're trading around an at the money, I could still get $2.50 to $3. Well, think about the math. If I did, let's say I get $2.50. Well, I lower my cost basis now to $67.98 and I have it covered at the money around $70 to $71. If I get it called away at 70 bucks, I turn what would be a 48-cent loss into a $2 credit. I'd still make $202 on the trade without having to take that $52 loss or that $48 loss. Does that make sense? So the reason I'm even considering that is looking at Dollar General on the weekly time frame. I mean, I don't know. I'm not saying that I love this stock, but I am saying that I'm kind of interested in a bit of a repair considering we are at 70% off the highs with gaps, with pockets, with inefficiencies to see if this thing catches a bid. I think this is a pretty straightforward stock to repair. The last time DG was that low was back in 2017. But unfortunately, I don't know, where the big decline has come outside of inflation's been hurting the Dollar General store and Dollar Tree for that matter, and Five Below and all those like thrift stores. Also, the friction with U.S. and China, potentially tariff, same type of thing. It's like that could hurt Dollar General a little bit too. So anyway, food for thought. Would I repair the stock? I think I would. I would try, and maybe it takes me 14 days, maybe it takes me 30 days, but I think I could repair it. So rather than losing 58 cents, I could turn it into maybe a couple $100. Okay. All right. So just thoughts on that. What else do we have going on today? I'll keep an eye on the 605 level on the SPY. Keep an eye on the QQQ. Watching the overall indexes today. Everything is in red right now. Let's go down the list here. SVXY. This one's still okay. Let me go to the daily time frame. So I'm just going to use my little watch list going down. Dollar index. I'm just cautioning everybody to watch out for this range in case this is I look at this as a potential pattern on the dollar. I'm just not going to take the bait. I think this is going to be noisy. So if we look at the structure here, okay, let's say we have, I was looking at this as a potential topping pattern. Okay. Don't be surprised if price comes back up to the same high. If we're lucky, we have a range trade that ends up selling off. If I'm going to get bearish on the dollar, I would like to see this. This is a 4-hour time frame. If the dollar index gets below my 200 moving average, I would look for some opportunities to sell. But if it stays above this 200 moving average, don't be surprised if we chop around here or we work our way back up to the same highs that we had that kind of very quick fade back on that was like late November, right? I was actually in Florida at the time when I saw that thing bounce. That was a big like PMI flush out in the Eurozone. So anyway, if we're below the 200 moving average on the 4-hour time frame, I'm more inclined to be bearish on the dollar. Otherwise, I think we stay in a bit of a range where the dollar remains bid. Okay. For your question, I have something. I have like I don't know what they call them now. They call them like, VIP access or lifetime or all access or diamond hands or I don't know, whatever they call them. You can chat with the team on that. Okay, so that's DXY. Let's go daily time frame. So how does that translate into currency pairs that I'm interested in trading? I'm still looking to buy the Aussie dollar around 63. These are my levels down here: 63.10, 62.10, 20. Let's see. Let me check something. Give me 1 second here. Okay. So I still like the 63, 62, and 6,000 is kind of the bigger like flush down, but I would be happy to kind of scoop up some, some bargain shopping. That'd be a really nice, level from high to low. That's a 740 point move. If this is nothing more than a big range from this 2022 swing from low to high, then we'll just see how this area trades. So Aussie dollar, I still like long. New Zealand dollar, I still like long. I understand that I'm not exactly precise on the bottom. This might flush a little bit lower. I got to be prepared for that. Meanwhile, dollar CAD, I still like long. We're at 40.37. I'll say this: if as long as my dollar CAD stays above 37.50, I'm going to remain long on dollar CAD up to 44.50 to 4,500. Okay, so if we pulled back to 4,000, that's fine. That'd be previous highs getting tested. We pull back to 39 or 38.50, that's fine. I look for price to give us a bounce. So if we pull back, looking for a bounce, and then resume this breakout trend. Okay, but this is going to be my target, and we have some major highs all the way up into this 4,600. That goes back to like 2016 and 2022, I believe, or maybe 2020. There you go. So that high is 2016. That high is 2020. So that, I mean, those stand out where if prices are going to do some type of, test or sweep of these highs, that would be, we're already starting to show the signs of it. And let's see if we make that run towards those highs and just kind of stay maintained above 38.50 or so, 3,800, 37.50 is kind of my line in the sand. If I was going to say, you know what, it doesn't look as valid. But if we stay above 4,000, I've got no problem hanging on to this trade bullish. Okay. Um, Good. All right, let me get some other ones. So that's dollar related things. Euro dollar, I'm not doing anything on right now. We're hanging out around that 105 level. If everyone was watching support, I know we had a nasty flush down to 103.30, but we came all the way back to 105 and change. So there was enough to kind of dollar cost average into that 105 area and still have an opportunity to be right, which is good. I'm not doing anything on euro dollar at this time. I've talked about this all week. If there's another opportunity to go lower, let's say this is, 1, 2, 3, 4, 5. If we have a fifth wave that pushes this down towards parity again, I'm going to start. I'm going to wait. If the euro dollar pushes down towards parity or lower, I'm going to start scooping up some buy levels in here. So I would say, parity to 97.50 to even 96 or 9,500, kind of scale in with three small trades and then stack these back up for a run to 105. I think that trade looks pretty good. But I'm going to wait and see if price ends up coming to me. Pound dollar, see if pound dollar's on. I'm getting the bounce off the trend line like I wanted. That's good. I saw the question for Swiss crosses. I'm still scalping Swiss pairs. So Aussie Swiss just looking to scoop up some lows. I'm still holding long, positive swap. That's about the only good thing going right now. But some scalping on some robots. It's just a buy only robot that scoops up little support levels. CAD Swiss, same thing. Euro Swiss, we're sitting with some really choppy daily candles here. We did have a little flash during that PMI news last week or the week before. And we're holding some pretty strong support levels around 9,200. Structure wise on the Euro Swiss, I would say this. I think we have to go out of this little wedge. Does that make sense? Like, I mean, look, price can do a lot of nothing, but next week we do have ECB rate decision as well as the Swiss National Bank. So both of those central banks have rate decisions next week. We also have Aussie. We also have the Canadian dollar. We also have the Fed, and we also have the Bank of Japan on the 18th and 19th. So we have 6 central bank rate decisions in the next 2 weeks. That's a lot for the market to digest. Price action wise on Euro Swiss, I'm still holding long Euro Swiss. I'm holding long for positive swap, but I think this is a pretty good looking wedge. As long as price doesn't go aggressively bearish, I'm just looking at this area to kind of hold and hang out. And then once this thing is done, I'm just looking for a price pattern. If we get something that looks a little bit more bullish, starts to get above my moving averages here, starts to break some structure and take out previous highs, then I'm looking for this thing to make its way back up towards this 9,900 zone. So my profit target is going to be 99. Ideally, I'd say 1.00. I'm stacked into, I've got 2 years of positions on Euro Swiss that, basically I bought the lows, bought some trend lines and stacked it up, pulled back again, bought back again, bought back again. Now I'm waiting. So in the slew of orders that I do have, I'm just waiting to see if and when the structure break, is there another opportunity that I can have to add to this, and my bigger profit's going to be 99 to 100. So 99.00 to 1.00 is going to be my profit target. I'm just going to, wait for price to, confirm. Don't add too quickly. And then once we get up here, I think that's a good area to say, okay, I can get bullish. If we revisit this level, I'll turn enough of these trades into winners. In fact, they'll all be winners. And I'll just take that big chunk of profit on the whole core position. Okay. All right. Good stuff. So that's Euro Swiss. Euro pound, I'm still holding a long position on Euro pound. Right now, just kind of hanging out in a small drawdown. I'm down $40. Swiss yen. Swiss yen is pulling back a little bit. I'm just going to hang on to this one for a symmetry trade in this yellow box down to 164. We'll see what happens. Okay. Watching some SPY levels closely. LLY. I have a 111 trade here. This is out to January. I have a trade running. This is part of the Pulver alerts. I did a 700 by 690 by 600. It's an income trade. I don't really necessarily want to own the shares, but I was looking for price to stay basically greater than 600 by January 17th. And if it does that, I'll make $1.90 per contract. So, I mean, the probability of that trade to me is pretty solid. After such a, kind of exponential rip here, I could see Eli Lilly offering some, some volatility, some chop, and that's fine. But my 111 trade is kind of out of the way, and I'm kind of cushioned to the downside. Like I said, I'm not intending to own the stock. I was just trying to keep price far enough out there. Best trade on that one, Trader Yen Journey's asking about Forex pairs and positive swap. Just think about the central bank rates. Best way, I mean, you can check with your broker and just ask for a list, but to me, it's common knowledge to look at what the official cash rates are for these central banks. So if you go to this website, cbrates.com, it looks a little old school, but if you take a look and see, like, where are the central bank rates? So, BOC is at 3.75. Well, if I'm holding, dollar CAD long, the US is at 4.5. Even if they cut rates another 25 basis points, a 4.25 versus a 3.75 is positive swap if I'm dollar CAD long. Okay, everything against the Swiss. So Australia is at 4.35. If they pause next week and maintain 4.35 versus Switzerland, which is at 1%, that's positive swap. Right now, everybody is positive swap against the Japanese yen. I just don't want to trade the Japanese yen. I think there's too much kind of fundamental nonsense that's going on. We're going to have some wild and crazy like intervention move by the end of the year. Are we going to see some type of BOJ move that's piggybacking on the Fed on the 18th? I'm not sure. So give me 1 second here. But that's where you can check it. So cbrates.com gives you all the official cash rates for these banks, and then this changes, when they make a decision. Like I said, we have 6 rate decisions coming in 2 weeks. So if there's any changes, any cuts, and right now there's no forecast. If we go to the calendar, pretty sure there's no forecast for any of these until next week. So next week, cash rate forecast would be a pause for RBA. BOC, there's no forecast, so I don't know if they're going to cut rates or pause. I would assume pause. Very few central banks are talking about cutting right now. The ECB might cut. Swiss National Bank, they're at 1%. I don't think they're going to do anything. ECB, they might cut 25 basis points and stop. I read that this week that they might do another 25 cut and then be done. So, does the market see any type of move on these currencies? Maybe, and we have also inflation data next week on the U.S. with CPI on Wednesday and PPI on Thursday. So we could see some decent volatility in the markets next week if data is, disappointing in the U.S. We've been on a heck of a hot streak with the U.S. The U.S. right now, global market cap in the U.S. alone is 63%. That's crazy. Like total market cap, all ETFs, all indexes, all stock market, total market cap is 63% in the US. That's huge. Japan is second with 5%. Like US is just clearly a dominating force in the equities market. But yeah, I mean, we'll see if the streak continues. Okay. All right. How will non-farm payroll affect it? I don't know. It'll probably be noisy like it always is. All I'm going to do on non-farm payroll is watch currency strength and see is there anything that's actionable. So what's happening in real time? Watch my dollar pairs. The one of my favorite trades during non-farm payroll is not trading the dollar, but watching the Canadian dollar. The CAD, the little neighbor to the north. No offense to Canadians. They have employment news as well. And not a lot of traders pay attention to the fact that the Euro CAD can move a decent amount, the pound CAD can move a decent amount, CAD Swiss, Aussie CAD, New Zealand CAD. I mean, I'll be watching those too. So that can be a little bit easier to trade sometimes than the dollar. Dollar's super liquid, but dollar also gets very, very choppy and messy during non-farm payroll. So just be careful. I don't know. I mean, it's just a noisy event. It's chop. Look at the 1 minute chart. We typically see like a big breakout candle, then a fill of that candle. Traders that are straddling on both sides or, putting buy stop orders above and buy stop or sell stop orders below get filled on both trades and end up getting, stopped out on both. It's just a messy kind of liquidity sweep type trade. So it could be very disruptive, right? Or interruptive, I suppose. Okay, what else? Personal opinion on gold. I like gold long. I like Bitcoin long. I just want to see a better price. Gold has done nothing for 7 days, so who cares? I'm saying that gold can still pull back into 25 and 2400. We've had a really nice run to the upside. If we have a correction, I'm just looking for a simple A, B, C to D. We settle into like 25 or 2400, then I'll look to see if we bottom out. I'll look for some opportunities to add more positions on GC for futures, GLD for the ETF, and same thing on silver. It's really well supported at 26. So I'm just going to level in. I'm medium to long term bullish on gold and silver. Okay. Chinese ETFs. I'm not in many Chinese ETFs. I'm in FXI and KWeb only. KWeb is large cap tech. FXI is large cap tech, and KWeb is just a tech ETF. So they're up a little bit on the day, which is good. Baidu making a nice little run at 2% up, but still, Baidu's also given back the entire rip that we saw from September. So look, the reason these are on my watch list is because I have exposure in all of these. I have shares in Alibaba and Baidu. I do have some shares in FXI. I have options on KWeb, and I have a trade with some ownership and some covered calls on JD. So I'm still in these stocks, but I've turned them into initially what was like, hey, this September thing is the real deal. Let's see if there's any follow through. Where I was like, let's hang on to some pretty big profit potential. To now, all right, let's just repair these for some income. So I mean, if I can flip Alibaba and Baidu for $500 to $1,000 per account, I'll do that. If I can flip JD for, I think I've got a trade right now that if it gets to $38 or 38.50, I'll flip it for like 650 bucks or something like that. So, I mean, to make a couple $1,000s per account, I'll be happy with that. Um, and then I'll reassess the whole situation. I mean, I don't mind the technical side. If there's continued this kind of continued effort to like lift animal spirits in China, then I'd like to think that this major support level that comes back into this area, carves out some levels, maybe rounds out this bottom, and then has some room to run, back up here towards 150 to 160. I mean, fundamentally, that's what nobody understands or nobody trusts. It's like nobody trusts a China stock. I mean, I get it. I don't know how to make sure that the fundamentals in the books and everything fundamentally is strong and legit. But these stocks valuation wise are cheap enough, and technically they're asymmetric, and honestly, sentiment wise, nobody likes China. So to me, that is a good opportunity where nobody likes it, nobody wants to invest into it. So I'm taking some stabs through options and I'm giving myself some good upside potential, and I'll continue to take some stabs at it. Okay. All right. Natural gas. Um, I mean, oil and natural gas, I think, are pretty vulnerable going into 2025. Let me see where they're sitting up here. So I've got CL, 68.58. This is crude light futures. We haven't really done a great job of holding above $70. It keeps making lower highs. We keep making equal lows. I do have a debit spread right now on CL. I'm just trying to be mindful of if the floor breaks, down we go. If the floor holds, up we go. I mean, like price is going to have to make a decision. I just don't know what that decision is. We have had a lot of pressure on oil all year, and this seems to be the floor. And so this decision is getting tighter and tighter and tighter. So this either squeezes to the upside with like a bear trap fake out trade, or this breaks the floor and then drops with a flood of supply in the market, because what's the US going to do in 2025? Probably drill more domestically, drill more globally. Whether OPEC likes it or not, Saudi Arabia wants lower prices and bigger market share, and Saudi Arabia, the U.S. are the two countries that produce the most and also have the best margins, where they can have oil at $45 a barrel, $40 a barrel, and still be profitable. It's not greatly profitable, but it's enough to squeeze the OPEC cartel, if you will. So I'm just watching. I mean, it's going to be an interesting like price action play on oil to see. The big story too with this is energy prices in the U.S. If oil prices are higher, inflation remains very sticky. Okay, right now, like services inflation is still really high. Transportation is still high. Healthcare costs are still high. House costs are still high. It's like inflation sticky in the U.S. Data comes out next week on Wednesday, Thursday. I would be shocked if we have lower inflation prints next week. And if we don't, that's going to be 2 or 3 months in a row that we're printing slightly higher inflation. And then we're no better off than where we were in July in 2023, where we're sitting right back around that 3% level. Right. So anyway, Euro pound position. How do you mitigate the cost of negative swaps? By being long against the Swiss and having a ton of positive swaps. So Euro pound is just a trade. I'm not really, position trading that one. I've got one trade in. So I've got one position versus, I mean, I've got 20 plus positions in dollar Swiss. I've got 20 plus positions in Euro Swiss. I've got at least a dozen positions in on CAD Swiss. So those positive swaps will, clearly overshadow a one or two leg trade in a Euro pound or something that's negligible. Okay. All right. So talks on gold. I would like gold to settle back into this 25 to 2400 zone. I'm going to start scooping up some more. I'll add some more shares of GLD. I'll add some futures contracts as well. Silver still pretty well supported around the 200 moving average, which is around 29.25, and also very well supported technically at $26. So I'll just be patient on adding more shares to SLV or adding any futures contracts there. Bitcoin, a little bit of rejection, but we stretched all the way to 103.6. Not bad. Not bad on old Bitcoin. So, the story continues. I have this yellow box is measured up to around 108. So that's my symmetry target. This doesn't mean it has to be a top. We could just, I don't know, we could pull back, right? We could have we poke up here with some divergence, we pull back in with some support, and we have another rip high. Walmart hit my level at 95 as expected. Very nice. How's the inflation data affect gold? Same way it's been affecting it all last year. If inflation's getting hotter, gold probably has maintained bid. I also think that the bigger story on gold is what the dollar is going to do. If the globe is trying to move away from the dollar and be in this, world reserve currency or gold as a store of value, I mean, gold's going to maintain bid by central banks when they're trying to get away from U.S. debt. So I think it's more than an inflation story. It's also a non-dollar story. Same thing with Bitcoin. Just alternatives are getting more and more attractive for emerging markets and countries that have been. I mean, if you've ever read anything on the milkshake theory, when we have times of crisis and we have all this like dried up liquidity, it all goes back into the dollar and it all flows back into U.S. Treasuries and bonds, and that destroys emerging markets. That destroys countries that are getting crushed by a stronger dollar. And so that's where these alternatives are gaining more and more traction. Okay. So we'll see. I mean, and look, I'm not going to go down this rabbit hole of like, I've seen reports literally on the dollar's going to fail for over 20 years. It hasn't failed yet. So I think that's all, I don't know. That's clickbait. That's the narrative that gets everyone, galvanized because it seems emotional. Your money's not safe. It's like, look, if we don't have the ability to be safe in the financial markets, then I guess there's no way to trade. So look, there's a lot of money to be made. It's been a wealth generating vehicle for over a century, you know, and I know the problem that we have is there's a lot of debt. I mean, for I don't know the numbers, but for like $100 trillion in GDP for the globe, there's like 300 to 400 trillion dollars in derivatives and over and like basically leverage debt. So it's a scary thought when these numbers are just like unfathomable. Blah, 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 blah. They're unbelievable numbers, right? But we're all in the same boat, right? Debt to GDP for the US is 120%, 121%. Debt to GDP in the Eurozone, debt to GDP in Japan, debt to GDP. It's like they're all the same. It's all crazy amounts of debt. It's all funny money. So I don't know what the end is. I don't know what the creative accounting is going to be to avoid some type of reality check. So I just trade. Like I said, if I live in a world where the financial markets don't exist, it's a very different world. So for those of you that have canned goods and bunkers that you can survive and get ready for the zombie apocalypse, then maybe you'd be in good shape. But that's not really the world I want to live in. Walking Dead is not my idea of where I'm like, let's go. I want to trade and I want to generate income and I want to provide and have a job that's recession proof and a job that I can make money on, whether it's bull or bear markets. That's what I want to do. So I don't get stuck in the doom and gloom. I don't get stuck in the euphoria. I'm in the trenches just trying to grind out profits. You know? All right. So we got a lot of active traders in the chat today, but look, like a trade, take a trade. If you want to learn how to trade and be risk defined, learn how to trade options. So I mean, that's probably the best thing I can give anybody instead of speculating and leveraging. It's like just be risk defined and take a bunch of trades. Options allows me to do that. That's why 90% of my portfolio is option trading. It's easy. You learn a couple of concepts, you learn a couple of core strategies. You can be directional. You've got 3, 4, 5 ways to win. Um, it is like playing chess in the markets, which it feels pretty good when the asset can go to infinity or go to zero, and I can risk the exact same amount or gain the exact same amount. That's a pretty good asset to trade. You can craft a lot of great strategies that way. All right. Videos on YouTube. Yeah, I've got my channel has a bunch of videos, youtube.com/Chris Pulver trading, or youtube.com/Chris Pulver. I got a bunch of videos, keep it seriously simple, trading 101, bunch of stuff like that. And then with these sessions, I'm live every day. I've got a final hour session at 3 p.m. that I'm live every day. And yeah, there's a lot of content. So check it out. Also have, the Pulver alerts through A1 trading for my trades. I have a couple of other services and also have a couple of options courses. One's $27 called Practical Options, and that's like the very quick and dirty version of options with 6 strategies. And then I've got a full blown course that's $497, which has 11 videos and 13 strategies. So I'm trying to help as many people as I can. Practical options. I just did this one. I'm working on another couple of courses: practical forex, practical futures. I mean, it's just I think traders get stuck in some bad habits, and traders make some terrible mistakes. They lose a lot of money up front, and it's hard to justify, like, oh, all I had was $10,000 and now I lost it. It's like, if you think about trading as a game of survival, it's a lot easier to make money. If you care about your bottom line, you care about protecting your capital, it's a lot easier to grow your money when you're not losing it a bunch. So, I mean, the trader that comes in swinging for the fences every single day at, 5% risk or 10% risk, that trader, give me 6 months to 12 months, that trader's probably not around. But the trader that's 1% or less, 1% or less, you survive. You give yourself a big, wide margin for error. You survive and you see the market do the same thing over again. Traders don't have difficulty finding trades and finding direction. They typically have a problem managing risk. That's usually what traders' pitfall is. They manage risk like crap. So survive, don't lose money, protect that bottom line, and just show that over a sample size, you gain along the way. It's easier to make money. All right, good stuff. Okay, what else? We did oil, we did gold, we did Bitcoin. All your peripherals are doing pretty well. BITO's up to some highs, IBIT up to some fresh highs. It's interesting. I did measure this. Obviously, I was off a little bit, but I measured approximately the gain that if Bitcoin did hit 100,000, that my IBIT, which is the BlackRock ETF, would be sitting around like $61.50. We've hit 100K. We're at 101. We hit 103. And we stretched up here towards about $59. Now, I was just a little bit off. Does that mean that I'm taking profit on IBIT? Not at all. I'm still in here for credit spreads. I'm still in here for ownership. I think my IBIT trades up about 40 grand right now. IBIT is up around $43,800 and still room to run. My BITO is up around $24,000. My Coinbase trade is up around $5,300. My micro strategy is up around $8,500. So obviously I have some exposure. My Ethereum trades, it's just EETH. That's up around $9,400. So I've got some good profits between gold, silver, and Bitcoin, turning about a 10 to 15% allocation of my portfolio into, 10% gains for the entire bottom line. Like, that's pretty good, you know? So I'm going to maintain the exposure. I'll stay patient. I like dollar cost averaging into IBIT. And since this was approved with the CFTC and OCC and SEC, now you can trade options on it. Okay. So I don't mind that at all. FBTC, same thing. This one's a little bit more expensive than IBIT. So I'm just going to BlackRock MicroStrategy. A lot of volatility today, gapped up towards, my gosh, we gapped up to 440 and we've dropped about $40 to $43 on the day. So that's a lot of volatility on old MicroStrategy. Coinbase gapped up. It's fading a little bit, but I'm still sitting here with a 220 by 230, a 111 trade as well. So some good income that's looking good for December, January. Ethereum has been actually outperforming Bitcoin. If you look at the two, Bitcoin versus Ethereum, we've been actually trending lower since the end of November. So Ethereum has been, kind of the catch-up currency over Bitcoin, which, it's good when they're both rallying, right? When Bitcoin's making its way up to 100K and Ethereum is trying to come back to 4,000. We hit 39.54 today. We have previous highs back in March of this year, and then the all-time highs go back to 2021. That was when the tech market topped out. Kind of wild ride, right? Like, we've been in a drawdown this entire time. But look, is this, and maybe this is wishful thinking, but what if this is a monster, like, head and shoulders trade? Left shoulder, head to neckline, like, what a great setup. If we get a pullback, what a great setup we could have here on Ethereum to make a run, back up to all-time highs. So there'd be ways that I'd like to look for a pullback and then express a long position, or we just continue to have the catch-up trade and Ethereum looks good to the upside. So to trade that, you can obviously, hold your coins and watch the appreciation, or there's a couple ETFs you can trade on Ethereum, which I've got them right here, EETH and ETHA. I don't mind either one of those. Copper, no trade there. Unless China really wakes up and starts to lift animal spirits again, I'm going to stay out of copper. Japanese yen futures, nothing on this one outside of maybe a retest of these lows. If we came back down to retest these lows on Japanese yen futures, I'm getting long. I'll do debit spreads, I'll do credit spreads, I'll make defined risk, but I will stack up, maybe, I don't know, 1 to 3% risk down here with options, and then have that turn into a 1 to 3% gain. Nikkei, I actually went long the Nikkei this week. I bought some shares of EWJ. I bought a $1,500 tranche, and I'm just going to look to see if the Nikkei will continue to try to get through whatever this chop is. So I'm buying the Nikkei basically right here. That's area 1, and down here, area 2. If we hit all-time highs, later this year, which probably not later this year, but even into 2025, if we make a run through these highs, I've already measured this move out on the Nikkei for a potential double-digit gain. So if we go to hit that measure move, that's another 18 to 19% to the upside. That would be pretty good. I mean, I don't know if anybody recognizes this, but the Nikkei at one point was outperforming the U.S. markets this year. The Nikkei was like the best performing index in the world until it wasn't. And that massive deleveraging that the Japanese yen saw from July to August was very disruptive on the Nikkei. But I still think that we have this high, this low, lots and lots of garbage trading in here that's just trying to build some type of accumulation until it's ready to make another run to the highs. So I'm in here for area 1, like I said. If we come back to revisit this low, why would I buy more Nikkei down at these lows? Because it's a 27% discount. If anyone had a 27% discount in the S&P, would you buy it? I would. If you had a 27% discount on the Nasdaq, would you buy it? I would. So that's why I'm saying if I took, chunk 1 and chunk 2 dollar cost average in, if we ever get back to those highs, you can turn that into a pretty nice gain. Okay. Pound Swiss, I'm long, but I'm not trading for this week. I'm trading for longer term. My bigger picture trade is Pound Swiss going to 120, so I'm just hanging on to it. You're not going to get a lot of trades out of me that's like, what's it doing this week? I don't care. My trades in Forex are usually, in the making of like weeks at a time, months at a time. And I trade open spaces where I can generate, hundreds and hundreds and hundreds of pips of gains. So I'm not interested in the small, tiny, tiny moves. I want big open spaces where I can stack orders up and I can dollar cost average and position myself for higher probability trades and, a lot less noise on the higher time frames. Okay. All right. What else? Check the Mag 7. We're getting a pullback on Apple. Still looking at the SPY today. It's at 606, 606.99 current price. 608.25 was the high. We faded off those highs a little bit. Just watching some order flows today. We'll see what happens. Apple fading off the highs. Amazon near the all-time highs. We hit 220 yesterday. Google looking okay. I needed to stay above 155. Meta at all-time highs, but fading a little bit today. Man, I'd like some Meta. I want to see. I mean, I've got an income play down here. If we can somehow get a pullback trade into, these moving averages, I'll probably start adding another 111 trade. And maybe even say, look, I like it enough. I'll just throw $1,000 to $2,000 at it and just buy some partial shares. Maybe not trade options on it, but dollar cost average into it, and then use options for income. But I'm just gonna wait. I mean, I just don't feel like as much cash as I have. Yep, Walmart's at all-time highs. We hit 95 this week. That's good. I took well, actually, let me see what this is trading for right now. Walmart is trading at 95.20. Let me see what my call option is. Oh my gosh, you got to be kidding me, dude. Son of a bee. So I close out a trade for profit at 77 cents. Is now trading for $1.12. That's a big sacrifice from my end. And then $1.18 is now trading for $1.73. Son of a gun. Well, that must have been a nice little squeeze on Walmart today. So Walmart did have a nice pop to the upside, and I guess I should have hung on to it. So my delta's up, my gamma's up, and that would have been a nice profitable trade. So it was. Look, it's already in. I've got this credit spread that's still going to be looking good for profit. See if I can turn this one. Oh baby, I'm going to close this thing down for 3 cents. Give me a 2-cent trade. Let me close this thing down. 2 cents, 3 cents is the ask price. Close this thing down. Don't be an idiot, Walmart. Come on, Tasty, you're better than that. Give me a fill at 3 cents. 4 cents debit. What? That's weird. I mean, it doesn't matter. I'm going to cancel the trade. So I have a 93 by 92 bull put spread. There is a 93% chance it stays out of the money for full profit. I collected 43 cents on that trade. Was it more than that? Maybe it was 43 cents. I think it was 43 cents. WMT. Yeah. So there's about a 97% chance that I keep that full 43 cents, which is going to be about a 80+% return on capital. I was looking to see if I can close it out right now for like a 1 cent or 2 cent debit. Then I was just going to take the profit, move on. But if it won't fill me at 2 or 3 cents, then I'm not gonna beg. I'll just let it stay out of the money. But yeah, Walmart's made a nice run. This is another stock. I mean, look, Walmart's never really moved like this. It's never really moved like this. I mean, seriously, going back to like even this stretch in 2017 to 2018, we've had a lot more dips and pullbacks. Look at this thing, freaking exponential. I mean, I have been trying to get my hands on Walmart all year long with option trades, and I have had no luck getting filled on ownership. I've wanted to play this thing since the 50s and 60s to take some shares, do some credit spreads, get assigned some shares, sell puts like nothing. Now it's not a bad thing. It just means that there's income that I've generated the entire time. But for a stock that's up from where I wanted to start participating here, I mean, starting to participate at these highs at 56, this thing's up 67%. So, I've got to make a lot of income trades there to kind of make up for what would be just if I had the stock and it was up 67%, that'd be pretty exciting. This is another one that also is much as I like the stock, it's a bit overstretched. It's technically probably due for a correction. And this doesn't mean I'm calling the top. I'm just going to say I'm waiting for a dip. If we have a dip on Walmart, I'm going to scoop up some more Walmart. But I'm not going to participate when this thing's just ripping to the upside. Now, that being said, I still have ratio spreads and credit spreads and debit spreads and all sorts of stuff that are making me money. But that's not the same as just taking the shares and sitting on them for, $30 to $40 gain. But still, a dip or a pullback, I like Walmart. That's one that's going to be a, forever stock in the portfolio. So pretty simple, but crazy, right? The stock is just ripping to the upside. All right. What else we have? Microsoft looking better. We're at 438. I'm trying to get this one. As long as we stay by the end of the year, this is only a couple weeks out, but if we stay above 435, that'll be a nice little trade. Let me see if Microsoft is in profit right now. Microsoft. Let's see here. That is a ratio spread. That's actually, what is this trade? It's not a butterfly. I think that is buy a put. That's a ratio spread. Oh, never mind. Hang on. So this is a ratio spread. This is a 10 wide bull put spread, and this is a 5 wide bull call spread. So I'm up about $700 right now, and I mean profit levels are looking pretty promising. This one I was looking to see. So 12. So I got in for 3. No way. I didn't trade this for 350, did I? That's a terrible trade. The 430 by 435. There's no way I got it. Should have been like a 265 debit. 265 debit. Huh. Oh, never mind. Trade price. I was looking at the wrong thing. I'm looking at the ask price. Here's the trade price. Should be 265. So 1924 minus 1660. Yeah, 264 to 265 debit. And right now my credit would be maxed out at $5, and it's trading for 345. So I'm just gonna let this thing hopefully do its best to go higher. And this credit that I'm showing right now gets up to $5. So I'll let that be an income trade on Microsoft. Netflix, we're at fresh all-time highs again today on Netflix. Congratulations, that's awesome. Again, a lot of income trades, not a lot of ownership. I want a dip, I want a pullback. I would love that. In fact, I just don't have it. So I'll wait. We have this big stretch away from the 200 moving average. If we get any pullbacks, I will be gladly looking for more Netflix to add, but nothing right now. I can't justify adding at these freaking highs when we're stretched away. We haven't had a touch of this 200 moving average. since that gap higher. That's now 284 bars. Percentage-wise as well, that's a pretty big move. We're 26% overstretched. That seems like a lot. So I'm just going to wait and see if we have a pullback. NVIDIA 145 this week. I had a nice little trade. It was a 138 by 139 bull put spread. Got some credit spreads as well. This is also a stock I'd consider taking some ownership of. But if we stay above all my levels and they close out of the money, that's just more income. Tesla at 370, also eking out some fresh highs. A lot of income trades here too. Berkshire Hathaway, I'm going to wait and see if I set a chart. I'm here at 442. Bond-wise, 10-year bond is up a little bit today by 0.55. Look, I still think this before I go today. 10-year yield going higher is not good for the stock market. 10-year yield going lower is good for the stock market. If I'm going to summarize, future growth and the strength of the U.S. economy and the strength of the U.S. consumer in one chart, it is this chart right here. Everybody that's buying a car, everybody that's buying a house, everyone that's doing any type of refinancing and student loans or refinancing in business, whatever it is, this is going to be what it's based on. So this going lower is better for the consumer and better for growth opportunities. This going higher is not. So if this 10-year is going to just hang out here, okay, fine. But if we have a directional move, it's going to have some consequences, positive or negative. So just saying. Just watch that. Okay. All right. Palo Alto, I haven't looked at that one in a second. 405. I mean, that one made a quick recovery. I was in Palo Alto initially when this bottom happened. I was in here with a bunch of income trades, and those worked out pretty nicely. So yeah, I'm not doing anything on this one right now. So all right, I think that's going to do it for me today. Got some China exposure to the upside, except for Alibaba. I need JD to get above 38.50. Yeah, we'll see. I'm going to stay pretty patient on that. Pfizer is another one that I need to keep a close eye on. Pfizer is at 25.42. My break even is like 24.70 or 24.50 on a call option. I'm likely not going to take the assignment or exercise the option, but I'm just trying to sell some premium against it. I go out to January on these trades. TFX 188. I mean, technically looks okay. I mean, as far as like a good level, I'm just a little skeptical of, what is the deal with this stock not performing well? There's support in here, but let me check it fundamentally. So TFX is what? Teleflex. I mean, that looks pretty good. Price to earnings, price to sales, a little bit high in the price to earnings. Let's check it against its peers. I mean, that's a lot of upside potential and discounted cash flow, which is nice. Peer average is 80 for their price to earnings, and they're trading at 36. Not a bad trade. Let me see what the IVX is. Let's go TFX. We're trading with an IV rank of 44.8. It's not a stock that I necessarily want to own, but could I do something income-wise, sitting at these support levels? Could probably do it a fine risk trade. I mean, that's 2023, that's 2022. COVID lows, we're trading below COVID lows, which is interesting. Let me see. Let me check the 1-1-1 situation and also the buying power. So let me look at like a 60 to 90 day trade. What I don't love is they have monthly expirations only. That's not ideal. If I were to go out to January, it's 43 days out. Premiums aren't that great with $5 wide strikes. Credit spread, collecting $1, risking $4. It's a little crappy. I mean, I could do a 180 by 175 perhaps. Somehow pull in less credit. The bid ask is super wide. I don't know, man. I mean, maybe it's just me. Like, I don't see it being a good option trade. It actually, in fact, might be better just to buy a little chunk of shares, like buy a couple $1,000s worth of shares and just see if that's the proper investment. Because option wise, I'm just not going to get what I like. If I want to do, okay, I'll sell a put. Well, it's going to cost me. I mean, if it's a cash account, it's going to be $17,000 required to make $70 income. That's a terrible trade, right? And the 170 and the 175, the bid price is the same. That's garbage. You're only getting like a couple of dollars for the stock on option. So anyway, option wise, it looks terrible. But technically speaking, I like where it's at. I guess the problem is if I just throw money at it, I don't really have any protection to the downside. I mean, I can buy a put, but that's just going to chip away at my overall debit. So I don't know, man. Daniel, you can't really talk me into it. Usually, I mean, if you point out a good trade and I like it, I'll throw an option trade on it. But I don't. I like this. I think this looks promising and encouraging. But unfortunately, I don't see a good way to trade it when the options chain and the strikes are so bad. So I don't know, man. Keep an eye on it. But there's pros and cons. So okay, I'll do this. Any other questions? Any other charts? What else are we looking at today? Tomorrow morning, there's non-farm payroll, 8:30 a.m. Eastern time for the U.S. We also have CAD numbers as well. That's always a nice little plan B to trade. It's kind of out of the it's in the peripheral. It's kind of out of the focus of what the market typically does on a Friday morning for non-farm, which is be noisy around the dollar. SPY wise today, everything's still in red slightly, down about 0.1%. Qs are down same 0.1%. Dow's down 0.28. Russell down 0.60. So yeah, a little bit of red in the day. Dollar index still slightly softer. Watching that 67 floor on oil. If we break above 70, just oil's going to have to make a decision here sooner or later. If oil ends up going lower, I'm curious where natural gas goes as well. Another one that's probably just unlimited drilling, trying to put as much supply in the market as possible. So this is another chart that, if we came back to these floors, $2 or less on NG, I'm going to start establishing some futures positions there. Gold, I'm waiting for a pullback. I'll just, buy at 25 or 2,400. Silver's pretty solid. Bitcoin, the story remains. I've got symmetry around 107 to 108,000. And there could be a little bit of a profit reaction there. There could be some symmetry. But, the amount of inflows that are coming into the major ETFs and the inflows that are coming into Bitcoin. I mean, Bitcoin within a year has actually accumulated more market cap than GLD. It took GLD like 8 or 9 years to accumulate the market cap that it has, and it took Bitcoin less than a year. So it's pretty nuts. I would say a highly accelerated, instrument, but it represents a lot of things. It's an alternative. There's limited supply, right? It's 21 million, so there's scarcity at some point. There's no more Bitcoin available at some point, but it's still risk capital. I still keep saying that. Okay. Let's see here. Do you always select positive swap trades? No, because we don't always have positive swap. We had a decade where there was zero swap in the markets. Brokers didn't give you anything. From like 2015, 16, 17, when interest rates were cut to next to nothing, 2020, when interest rates were cut to nothing, there was no swap in the market. So, when you're in periods like that, you just got to trade. But when you have positive swap, I do tend to favor the way that I trade is I tend to be in positions for, weeks at a time or months at a time. And so when it comes to that, I'm a little bit more conscious of, do I like the technicals? Plus, do I get some positive swap? I like that trade a little bit more when the swap is available. But it depends on, what liquidity providers are doing to then pay the broker to then pay us. We're the last. We're the last to get paid. So, I mean, and I say that because all the central banks were raising rates in creating these positive swaps in 2022, and my broker platform was not. And I was actually really pissed about forex trading in 2022 because I started this Swiss campaign early. Anyway, it doesn't matter. It's paid for itself in a big way now, but still, it was frustrating. But because I have positive swap, yeah, it's a factor in what I do. All right. That being said, it's 11:15. I'll let you go. Tomorrow morning, non-farm payroll. Let's see what happens for the rest of the day. I'll be back live on my own channel, youtube.com/Chris Pulver at 3 p.m. if you want to join me for a final hour session. So far, pretty good trades for the week, and we'll see you soon. All right, thanks, bye.